So it is a system that ideally should cover the entire railway system. And we are in the very early stages of implementation where this is being implemented to say that let's make the Indian railways accident proof.
Or a safer mode of transport,
Yeah.
because there's so many lives at stake, right? Okay, so welcome again to another episode of Taking Stock, a podcast where we do a weekly deep dive into one company, one stock every week. Today we're talking about HBL Engineering, one of the big players in the railroad sector. When was the last time, Sagar, you took a train?
Last week. I in fact take trains very often. So I hop between Bangalore and Chennai and it's a train every second week.
And I'm assuming there's a huge number of Indians that are dependent on rail travel. I think it's an ever-growing industry. So let's deep dive into HBL engineering. Right now, the first thing about when we talk about the rail industry, right? There's a new initiative that is coming up from the government's end called Kavach. So maybe we start there and tell us a little bit about what Kavach is. And how is it going to revolutionize the railroad industry in India?
Wow. So Kavach essentially is something that it's a protection system.
Okay.
Let's look at it as an accident prevention system. So it's a very complex mechanism that involves train signaling, that involves equipment, that involves algorithms, that involves various tech pieces coming together,
right?
In order to ensure that accidents are avoided, accidents are sometimes predicted, and hence preventive action is also taken before they occur. So it is a system that ideally should cover the entire railway system. And we are in the very early stages of implementation where this is being implemented to say that let's make the Indian railways accident proof.
Or a safer mode of transport, because there's so many lives at stake, right? So when we look at HBL Engineering as an organization, maybe before we sort of deep dive into how Kavach is going to actually bring in a lot of revenue and make this a really sexy rail stock, probably we want to start with what HBL Engineering is as a company, their background. They've got a pretty interesting story from what I've read.
Yeah, it actually didn't start as a rail company. It started as a battery manufacturer.
Right.
And we're talking about industrial batteries. We're not talking about cells that go into your consumer devices and stuff like that. It's a merger between two companies, both companies founded by the same founder, and then he eventually merged the companies in the late 90s. The first company was called, which is also the full form of what HB stands for.
Hyderabad Batteries.
Yes. So Hyderabad Batteries.
I've done my reading.
It was supposed to be for the viewers, but okay. Hyderabad Batteries was the original name, and then it merged into another company that was started by the same founder called SAB Knife or SAB Knife or however you want to pronounce it. It's a Swedish company called SAB. Interestingly, NIFE or knife or whatever however you want to say it, it stands for the battery technology that was developed by this company.
Okay.
And knife actually is NI and FE.
Okay.
Right. So it's a nickel iron.
Oh,
battery.
From the periodic table.
Yes. So nickel is Ni, Fe is iron, and that's why the company's name was Knife. Interestingly, when this company started, they were making, they hit the market with something, batteries which are made of nickel and cadmium. So that was the original business.
Right.
Now, these batteries have been, and surprisingly, HBL Engineering is the second largest producer of these batteries in the world, nickel cadmium batteries. So that was the original business or the first
But
business.
What's the use case of nickel cadmium batteries?
So these batteries were used everywhere, telecom, railway, defense, everywhere where there is an industrial application, these batteries were used. Eventually what happened is that battery technology has also been evolving over the years. And these batteries, although they are still prominent, there were a lot of batteries which were also nickel ion based, but those got replaced by lithium ion. By lead acid.
Right.
Lead acid is now getting replaced by lithium ion.
Right.
So there is an evolution in battery technology as well. The nickel iron batteries they were manufactured or discovered by Thomas Edison in 1901.
Right.
So it's a very old technology, very reliable technology. However, they are very heavy. They're clunky
Right.
in nature.
Right.
They're not so reliable when it comes to charging and discharging. They're very durable.
Right.
Sometimes the batteries even outlast the underlying equipment and the company. So very reliable, but heavy and not so cost effective.
Right.
That's when lead acid came into the picture.
Right.
And now
right,
the
right.
same thing is happening with lithium ion coming in and lead acid sort of becoming a little more redundant. So to answer your question, HBL is a company which used to produce these batteries. And then from there, they became an engineering company. So now that they're providing batteries, they started providing fuse devices for railways, for defense equipment. Then they started producing other electronics that are used in complex machinery all across
Right.
these sectors. And now they are entering
the railroad sector. Yeah.
Yes. So in short, if I have to understand or put across what is HBL engineering, I think it is a engineering company that has predominantly focused on batteries, but now is focusing on being an overall engineering or electronic manufacturing company.
Right. So, I mean, I'm assuming it's safe to say that one thing that sort of worked for HBL as an organization is that it has constantly evolved, right? Even from the sort of timeline that I can see over here, from 1991 to 92 to 99, and now when we cut to 2024 or 2025, they have sort of managed to evolve themselves as an organization into something very different as compared to what they started with. And I'm assuming it's safe to say that that's probably one of the key pillars of success for the organization.
Yeah, pretty much. Because in any technology, things are always evolving. And if as a technology provider, you're not evolving with the underlying tech, then it's going to be a problem,
Right.
which is quite existential in nature. So these guys have evolved over time. Even now, if you look at the entire revenue stream, there is a lot of evolution happening within their revenue stream. So if I have to look at
sorry.
so if I have to look at their overall segmentation, right? They look at their revenues as three parts. There is one which is industrial batteries, the second which is defense, and the third is electronics for industrial use. Within the batteries, if you look at, I'll just give you one brief example. Is that telecom companies, right? Whether it is telecom towers or the underlying equipment for 5G, most of it has been reliant on lead acid batteries so far.
Right.
However, they are quickly moving into lithium ion.
Right.
So what is happening is that revenue is actually dipping. It was very high for the last couple of years because of the 5G deployment. However, it is now starting to dip for someone like an HBL, which was dependent on lead acid batteries and revenue from there. And now that it is moving into lithium ion, these guys have taken a conscious call to sort of stay away from that, saying that there is a lot of unfavorable pricing in lithium ion batteries. And the battery manufacturers or cell manufacturers are not really giving warranties on those cells. So that is exposing these guys to a lot of risk.
Right.
So they're saying that we're going to stay away from it and actually take the dip when it comes to the lead acid battery revenue in telecom.
Right.
However, at the same time, if you look at the other verticals, which are defense and railway, they're actually introducing a lot of lithium ion products in those segments.
Right.
So they are picking their battles very smartly, and they're saying that if anything is capital intensive, if anything is coming at the cost of pricing or profitability, if anything requires a lot of the industry dynamics are not really favorable, and if anything is reliant on imports to a very large extent, they're staying away from those industries.
Right.
So even while there is an underlying evolution or a tide change within the various segments, HBL Engineering is someone who's been very picky and smart in terms of picking their battles. So that is, as you rightly said, one of the things that is that has led to the kind of growth and survival for HBL, and will continue doing so in the future as well.
Right. So now when so the core proposition of the company now, or the major revenue stream, is coming from defense products, products within the railroad industry. As we said, we spoke about Kavach earlier, where, so going back into that, right? Kavach is a government initiative to ensure safety and sort of longevity of the Indian railroad network, right? And with Kavach coming in as a government initiative, that brings in a big boost and a lot of revenue to HBL as an organization, makes it look like a very attractive stock, right? But what happens once Kavach is implemented across the entire railroad network? I'm assuming it's a matter of a few years, maybe a decade. But once Kavach is widely implemented across the country, what then happens to HBL as an organization?
See, first, I think we have to understand that Kavach itself is in a very preliminary stage when it comes to implementation. Secondly, HBL has also been evolved in development of the Kavach system, wherein there are only three vendors who were part of the entire development, underlying development of Kavach. All these three have also been developing a system which is based on interoperability. So if you've developed a system, I've developed a system, both of these can talk to each other and function together as a system.
Right.
And that is what is important at a unified country level, that these systems are seamless.
Right.
So second is that. We're sort of establishing that HBL has a stronghold in this. There is a certain dependency of this. So far, it has won about 4,000 crores worth of orders on the Kavach system itself.
Right.
Right. However, obviously, these things come with a shelf life. Because once, as you rightly said, the project is done and it's implemented, what happens next? The timeline behind this is quite fuzzy. Some may say it will be in the next 3 to 5 years. Government obviously puts out these ambitious targets.
Right.
Whether they're achieved or not is a different thing, but there are targets set and there is budgets increasingly ramped towards this.
Right.
And recent rail budgets have also reflected the kind of focus that the government has on this system. So focus is there right now. However, some argue it will be there for 3 years, some argue it will be there for 5 years, some say it will take even 15 years for the Indian Railways to implement it. Timelines, debatable. We'll go by what the company is saying right now, just to be on the safer side.
Right.
Because they obviously have a more in-depth understanding of these things. These guys are saying that till FY28, they will see continued order inflow from the Kavach revenue stream.
Right.
However, it will start peaking towards FY28. And after that, it will start seeing a decline.
So you mean the order book will start seeing a decline?
The revenue incurred from the order book.
Okay.
So order book might be one thing, but obviously as the order book also expands, it's like a bucket with a hole.
Right.
Once you implement it, the bucket has leaked.
Right.
You've got to fill it in with new stuff. And as you increase the order book, the bucket gets larger.
Right.
So by FY28, the revenue will peak out and it will start reducing. However, the beauty of HBL is that it's not only focused on Kavach as a revenue stream. Within rail, it also focuses on rail signaling as a business.
Okay.
So rail signaling is also a very large opportunity which is present for HBL. And this again is a very complicated system where it's not only the signals, but transmission, speaking, communication between the train systems and the signals, the entire network.
Right.
And in this, it's a fun sort of fact that there are only 6 players which have been involved in setting up the initial rail signaling system or rail management system in India. One of them has been Bombardier, which is a global giant in rail. Second has been Alstom. And the rest of the 4 systems are all developed and deployed by HBL.
Okay.
So initial stages when it comes to rail management as well. However, this is something which at a larger scale will get implemented across the Indian rail network. So the management is expecting that although revenue will start to peak out in FY28 and decline from Kavach, over the next few years, revenue from this aspect will more than offset what is the decline from Kavach.
And I guess HBL is known for evolving in the right place at the right time. So that only works in their hands. So let's say, I mean, no pun intended, but how does a company like HBL stay ahead of the curve, right? What do you think is the future roadmap for them after Kavach, beyond rail signaling? Are there other sort of revenue models that they can sort of go after in the next decade?
So one is, if you look at the traditional business, which is of batteries. So batteries, they've been growing at 30% year on year. And while the sexy part of the business is Kavach and rail and, rail companies, usually the good budgets from government start to reflect in the company's financials and stock prices. Bread and butter for them is batteries. And in industrial batteries, they've been growing at 30% despite the internal tides or pressures that come industry-wide. So that will continue. Within that, they are very conscious of saying that we'll stay away from anything that is mass market and that requires capex. One good example of that is automotive batteries. Everybody is setting up capacity. People like BYD, for example, are setting up capacity for batteries and manufacturing the EVs as well. So if you've got a fully integrated value chain wherein you're manufacturing battery and the application, does a HBL have any place in that market? So these guys say, let's stay away from it. Let's stay away from anything that has pricing wars or pricing competition. So they select niche areas and they'll continue to do so. So when it comes to niche areas, what they're focusing on is solar, they're focusing on railways, they're focusing on defense, they're focusing on data centers. So these are still high growth sunrise industries, but with specialized applications, more engineering work and not commoditized work, and higher return ratios or better margin profiles.
Fair enough.
So number one, I think as we speak about the future of HBL is that within batteries, they'll continue doing well in the specialized segments. Number two, where they'll probably do well is electronics in either defense or railways. A good example is they make fuse devices for the defense. So every ammunition that you send out or that blasts or whatever needs a fuse to go off.
Correct.
Right. These guys manufacture those
fuses. Yeah.
So that is a great revenue source. These guys manufacture batteries for defense aircrafts as well. So anything associated with defense is another area which, like railways, very high in terms of government focus.
Right.
So that is the second area. The third area where these guys are likely to do well is, and that's a little bit of a bet the company has taken, is that they're producing their own e-trucks.
Okay.
So they'll be manufacturing their own electric trucks. They've currently they're launching two models here. One is a 35-ton model and one is a 55-ton model.
Right.
So this is actually a engineering, electronics plus battery manufacturing company which is going to assemble its own EV.
Right. And it is, I'm assuming this is one of their few bets within the sort of main market consumer sector.
Yeah. So, and it's a niche area, right? Currently, you don't see a lot of people entering this area. But these guys are actually, they've got a separate subsidiary. They're planning a lot of highway infrastructure to be rolled out by FY26. They're creating a captive charging ecosystem as well. So they're taking the necessary steps when it comes to actually being able to do so.
Are there any other big players in EV trucks?
So one of the comparable examples that I can think of when we speak about such a transition from a part or component manufacturer to assembling an entire thing is Tube Invest.
Right.
So Tube Invest is a company which primarily used to manufacture precision materials and engineering materials for autos and railways and aircrafts and stuff like that. And they launched their own three-wheeler, which is called Montra. An electric vehicle, which you nowadays see a lot in Bangalore and Chennai. They're actually one of the top 10 selling auto rickshaws in the EV space now.
Right.
And these guys have never manufactured their own vehicle, right? And suddenly they are.
Right.
They actually have plans, or they've set up two different subsidiaries, other than the three-wheelers. One for EV tractors and one for EV commercial vehicles as well.
Right.
So they'll be one of the other sort of contenders in this business.
In this sector.
Coming out with their own transport. So from a long-term perspective, I think there is a lot playing for this company. And while the bread and butter business itself, you can project a certain revenue, I think the rest of it, like the EVs, for example, comes as an option value. If it works out, great. If it doesn't work out, they're anyway assembling, they have the necessary space for it. There is not much of a capital expenditure required for it, and they're already incurring that cost.
Right.
So from a FY30 perspective, again, there's not too much covered on this company, so we rely a lot on the annual reports and what the management has to discuss. The management is aiming for about a 4,500 crore revenue by FY30.
Right.
From its current, about 2,000 crore. So roughly 2x plus is what they'll achieve in the next 5 years, is what they're aiming for.
Right.
Within this, they're saying that the largest contributor will be rail signaling. The second largest contributor will be electronics. That they're manufacturing for the fuses that they're manufacturing for defense or the other areas.
Right. So makes sense. So now let's look at it from an investor's point of view, right? Is it an attractive stock? What does it mean from a financial valuation perspective? What would you recommend to any investor who has this on their watch list?
So one of the things that you look at in a company like this, so one thing that strikes out amazingly not well maybe, is that the company trades at a very high valuation.
Okay.
So if you look at the price to earnings on a TTM basis, it's at about 80 times,
Right.
which is very, very high.
Extremely high, yeah.
Which is extremely high, right? So from a company perspective, it's one of those cases where it's a great company, but what is the price you're paying for the stock? Now, there are 2-3 things involved here. One is that TTM PEs are usually not so helpful, because if the company is a growing company, you are actually buying it for future, not for what it's done in the past.
Right.
So you've got to look at forward Ps. That's one. So how do you sort of, we won't obviously come to a buy or sell here, but we'll just put a structure to how to look at we'll put a structure to how to look at the valuations for this company, right? So if I just plainly look at the fact that it's 2,000 crores of revenue right now, and they're aiming at about 4,500 by FY30, you're looking at a 15% revenue CAGR over the next 5 years. This company operates at a EBITDA margin of roughly 20%.
Okay.
They have net profit margins of roughly 15%. If you assume that they'll maintain those margins, then you're looking at a net profit of about 600 crores. For example, they do 4,000 crores of revenue by FY30.
Right.
They'll do roughly 600 crores of profit after tax by then.
Right.
The current market cap of 23,500 crore on 600 crore still turns out to be, and that too at a FY30 basis, right? Still turns out to be pretty steep. However, what we need to figure in such companies is, are premium valuations justified or not justified? Now, there are 3-4 arguments that we can make towards justifying the premium valuations. Number one is the fact that any battery, once you place it in any equipment, it requires replacement over a period of time.
Right.
So once these guys have gotten into a company and placed their battery there, it is very likely their replacement contracts
they're going to come back to them. Yeah.
And that is healthy, visible revenue. So when revenue visibility is high, the markets like it.
Right.
The markets like high growth, and the markets like visibility of high growth.
Right.
So if you've got these two metrics in place, valuations usually tend to sustain at high levels.
Right.
So one factor that is in favor of this company's valuations is visibility. Number two is that these guys are operating in sunrise industries.
Right.
So data centers, defense, railway, there is government tailwind there. There is a massive inflow of budget in these areas, and these guys are at the top of their game when it comes to specialized engineering products or solutions in those areas.
Right.
So which is also, it implies that this revenue is sticky, right? And because it is specialized, they're also ensuring that margins are high, because pricing is premium. So, and that is visible from the fact that they've got a 20% operating margin. And if I look at the ROE and ROCE, it's at a 21% ROE and 26% ROCE. So the business has got very healthy return ratios as well. So these usually work in favor of the high margin, high valuations.
Right.
However, whether you want to take an entry into high valuations at this point in time or not, I think that will depend on investor to investor.
Right.
And that's where we sort of draw the line and say that for us, it may not look good.
Right.
For you, it may not look good. It depends on what price you're comfortable paying for it.
Correct.
I don't want to give our preference, because that would
fair enough.
not be okay.
Fair enough. But I think, that's pretty much it. If you look at it overall, there's a lot going for HBL as a company. There's a lot of prospective revenue coming their way in the next about 4 to 5 years up until FY 2030. And to know more, feel free to get in touch with us. That's all for this week, and we will see you next week with another stock and another company. Thanks a lot.
Disclaimer. This content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.